Welcome to Financial Issues with Shana Burt, where we join reality with truth, helping you to make the most of your money by honoring God with your investments. Now, here's your host, Shana Burt.
Good Thursday morning. It is May 16th, 2024. We're so glad that you started your day with Financial Issues. We are a ministry that educates and equips God's people, that's you, to honor God with your investment strategy, your stewardship, and your giving strategies. For $132 a year, you can be a partner with this ministry and get access to our biblically responsible investment strategy. If you are a partner, we hope that you joined us for our conference call yesterday for partners only. If not, the recording has been posted, and you should be able to access that by logging into your partner account and going to the conference call page and then clicking on that recording. Our stewardship verse today comes from Proverbs 21:20. Precious treasure and oil are in a wise man's dwelling, but a foolish man devours it. So it is very good wisdom not to devour everything that we have. We should not eat our seed. So we talk a lot about giving here in the ministry. We encourage you to fund the light, to be a joyful and generous giver. And for the rest of the month of May, we are helping Preborn Ministry raise money to fund the light, to fund the work that they do, to help save the lives of babies, and to preach the gospel to mothers and fathers so that they may choose eternal life. Well, Seth, I hope you can give us an update a little bit later in the show and tell us where we are in this campaign.
We'll do so, Shana, for sure. Yep.
Good. We've had so many calls from partners, people calling in and saying that they're giving money to Preborn, and I love to hear that. And they're using the strategies that we've taught them.
Absolutely, giving out of their stock and giving long term. Right, we talked about that. That's great. You guys are doing a great job. Keep it up.
Yep. So if you're rebalancing your portfolio, or maybe you've just recently heard about biblically responsible investing and realized that you own a lot of companies that are funding darkness and you want to get rid of them, but maybe you are hesitant, or maybe looking for a strategy on how to get rid of them without incurring tax consequences, you can gift stocks. So, if you're currently a giver, you can give stock instead of your cash, and you can use your cash then that you would have given to replenish that into your portfolio. If you're 70 and a half and you have an IRA, and you want to give directly from that, you can. That's a great way to get money out of your IRA without paying taxes on it. So we've had lots of calls this week with partners that are not only giving to Preborn, but doing it in a very smart way.
Yeah, it's good stuff, Shana. Hey, let's get to a headline here that I thought was just really interesting, and I'd love to get your take on it. It's a little disappointing, but it does need to be talked about. So the headline is U.S. restaurants and bars are falling on hard times because of Bidenomics. I don't think that's a surprise to anyone. So it says your visits to sit-down restaurants were down nearly 5% in 2023 from the year prior. There was another report recently. More than 40 restaurants closed in New York City from December of last year to January of this year, with some of the owners saying businesses never returned to pre-pandemic levels. Restaurants in middle America have been hit the hardest, apparently. Household incomes are lower. Americans are struggling just to pay their bills. And, one of these articles, Shana, just references the out-of-control government spending that's exacerbated this inflation, as well as the absurdity of California's wage hike for fast food workers. We talked about that a little bit on yesterday's show. Once reliably cheap on-the-go meals are now being priced higher and higher. So, Shana, I know we have some small business owners in our listener base, and my question is, what can these business owners do? And we support them, by the way. If you have a small business, that's awesome, because that helps the creation of jobs, and that's really the backbone of our economy, I feel like, in many ways. What can these business owners do to protect themselves, their business, and their employees from the harmful impact of Bidenomics, Shana?
Yeah, I remember when all of the inflation first started, there was a lot of debate about what was actually causing it. And, I said early on that it's government spending. The government was putting way more money into the economy than what there needed to be. The response to COVID was exaggerated. So, now we have the government, the Fed fighting the government. The Fed's trying to bring down inflation with the tools that they have, but if they use the tools anymore that they have even more, they risk really breaking something. And now I think it's becoming obvious to a lot more people that the problem is government spending.
Yeah.
And, so I would say you have to do some very practical things. Don't follow the example of the government. Don't spend a lot of money that you don't have. Sometimes running a business involves taking on responsible debt, but you have to make sure that you can service that debt and that you're not getting overloaded, and that you're investing the money that the proceeds that you get from taking on debt in a very efficient way. Be wary of taking government money. The government should not be getting involved in the private market. You have to look for efficiencies. You have to constantly be evaluating your business. Could your business benefit from AI? Can you afford all of the employees that you have? Are all of the employees that you have contributing to the success of your business? Do you have inefficient employees? Do you have employees that are just, taking advantage, just showing up for a paycheck? So you have to, evaluate those things. Maybe you have to move. If you're in a state like New York or California, there's a lot of smart business people that have moved out of those states because the environment is not really friendly to small businesses. I mean, if you own a restaurant in California and you've just been required to give all of your employees raises to $20 an hour, well, you have to really sit down. You have to do what the Bible says. You have to count the cost. Can what you're bringing in cover your expenses? You may have to make some hard decisions. You may have to pass those extra costs along to your consumers. The government hasn't quite figured out how that works and how that factors into inflation, but and I don't know that they ever will. You have to talk to your elected officials. Things like this happen in California because of the people that get elected or the people that are in office. So you have to put pressure on them when they're making policies that impact your small business, and you have to vote. So, I saw recently, or I've been listening to some of the campaign rhetoric that has taken place, and now Trump is vowing to replace Bidenomics with Maganomics on his first day in office. So former President Trump told a crowd of some 80,000 supporters on Saturday in New Jersey, of all places, that he will replace Bidenomics with Maganomics on his first day in office if he wins the 2024 presidential election. He said, so he was in New Jersey and he was talking to families there, and he said that the average New Jersey family had lost over $23,000 due to what he called the Biden inflation tax. And, a lot of economists call inflation a tax because it really has the same impact. It takes money right out of consumers' pockets. Then former President Trump rattled off a list of cost increase on everyday items, things that we know are happening, but that the Biden administration wants to, take victory laps on. Eggs are up 50%, gasoline's up 50%, bacon's up almost 80%. Trump said that voters can choose between the Biden tax hike or Maganomics. So he proposed to put an end to Biden's Green New Scam by opening up, that's what he called it, by opening up domestic drilling and to reduce high energy prices. So very interesting there. I really do hope that he gets a chance to implement some of those strategies, because Lord knows we need help and we need it badly. So get involved, folks. You may not like the two names on the ballot, but you have to vote for one. Vote for the one that aligns more with your moral convictions as a Christian. Don't go anywhere. We're going to take a break, and then we'll be back with more financial issues.
Throughout the month of May, FISM is partnering with Preborn to fund the light by providing 100 ultrasound machines to pro-life centers around the country. Now, how can you contribute? Well, for as little as $28, you can provide an ultrasound scan to an abortion-minded woman in crisis. And when that woman hears the heartbeat of her baby, she will choose life. Get this, 90% of the time. It's remarkable. And guess what? With the help of a donor match, for every 200 scans donated, that's for a net value of $5,600, Preborn Ministries will be gifted an ultrasound machine to place at a clinic in need. Each machine has the potential to impact hundreds of thousands of mothers' choices. Preborn also offers additional support to mothers in need and presents the gospel to every mother who comes into their clinics, knowing that salvation is the greatest gift that can be given to a mother and her child. So go to preborn.com/FISM to give. That's preborn.com/FISM.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Welcome back to Financial Issues, everybody. Here we have some good stuff to get to here. Shana, the great question came in that I'd love to hear your thoughts on. This is from Carol. Carol says, I basically know nothing about investing, but I heard you on the radio, and so I love the Christian values you have about investing. We now have some money in a safe deposit box because we're concerned about the safety of banks. I'm almost 80, husband's 82. I'm sure this would have some bearing on how we invest. Right now, I feel like in the story of the talents that this money's wasted as if it was buried. I feel that God is wanting us to do something with this money to earn more money, maybe to use it for him in some way. We should be investing some of it, maybe put some of it in a credit union where we can access it to do some home improvements. Please give me some advice on how to get started. It's one area in which I'm quite ignorant, and just let me know how to get started. Carol, that's a great question. Shana, what are your thoughts?
You know, I think the best place to start is to always ask God what he wants you to do with it. So you mentioned a couple of things. You mentioned investing it. You mentioned doing some home repairs. First, I would make sure that you have some emergency money on hand, because if you are going to make a decision to invest, then you don't want to have to be forced to sell an investment if you need to redeploy that money or to reuse it for something different. So make sure that you have that emergency fund set aside. Then if you're going to invest it, then you really have to assess what your risk tolerance is and what is your goal. Do you want to grow it for the kingdom? Do you want to grow it for your heirs? Do you want to have it invested and maybe earning some interest and maybe be able to increase your giving through that way? Well, if you do, you might want to look at our income strategy. That is for people who are interested in putting their money to work. So we have an asset allocation model that you can look at. And if you follow our step-by-step strategy, it'll help you deploy some of that money, start generating some income, and then you may have a little bit of extra money to spend. Or if you're not in need of that income, then it would increase your ability to give.
That's awesome, Shana. Thank you for that answer. And, you know, so much of our strategy as we talk about, and this is for Carol, but it's for everybody as well, is, you know, that we're looking to do it long term. And so we believe that long-term strategy is the key to successful investing. So here's a topic that we come back to often, Shana, but I think it's well worth coming back to: trading versus investing. I just want to start by just defining our terms. What is trading? What is investing? How are they similar? How are they different? What are your thoughts on that?
So trading is going to be really focused on the short term. So it looks at stocks, it tries to capitalize on short-term trends, getting in and out of different positions. Investing is something much different. Trading is really more like gambling, because you're trying to make a quick buck. It's typically motivated by greed. Investing, on the other hand, is looking for long-term opportunities. If you were going to, as a individual, if you were going to open a business, maybe you were going to buy an existing business, what are some of the things that you would look at? Well, you would want to see that the company has had a successful track record. It's got a good customer base. It's got reliable revenues. There's the ability to manage expenses in a good way, in a profitable way. So what we propose is that you are an investor, not a trader.
And Shana, is there ever a time where a more short-term approach might be beneficial for an investor?
You'll probably be surprised to hear me say this, but yes.
Okay.
But it's only when you have short-term goals. So if you have a short-term goal, maybe you're saving to buy a house or go to college or something like that, and that time frame is getting closer and closer, you can invest. Now, investing doesn't always mean that you invest in companies or equities or market type investments. It could mean that you invest in a CD. If you know that if you have a chunk of money and you know that you're going to buy a house in a year, well, you don't want to invest that in something that has a long-term time horizon, because when that year comes up, you never know what's going to happen in the short term. You don't know if there's a black swan event like, COVID, for example. Nobody really saw that coming. It caused the markets to react in a very negative way. Now, the markets did recover, but if you were, let's say that it was the summer of 2020, and you had planned on buying a house that summer, well, and you had invested that money in market-type investments or equity-type investments, well, your plans may have been derailed because rather than growing that money, you may have been forced to sell your investments and take a loss at the time. So you really want to match your goals to your time horizon.
And Shana, speaking of that time horizon, why is it for investors that the goal is 8 to 10 to 12 years and not just like 4 or 5 years? Why is it more that long-term 8, 10, 12 years? What are your thoughts on that?
Well, statistically speaking, the odds of losing money decrease significantly as your investment time horizon increases. So if you're looking at making money in any 1 year period, you have about a 75% chance, based on historical returns, you have about a 75% chance of actually making money. That means that there's a 25% chance that your investment will be lower a year later than when you started. Now, if you hold for a 5-year period, the odds drop to around a 16% chance of loss. And then if you increase that holding period to 10 years, you only have about a 10% chance of being lower than where you started. Now, that's if you have a 100% equity type portfolio, which we don't really recommend for almost any investor. We do recommend diversified portfolios, and you'll see that when you become a partner and you look at our asset allocation models. So, unless you're really young, you're probably not going to be all invested in equities.
Yeah, that's good stuff there, Shana. You've been doing this for a long time, professionally as well as personally. How successful has the long-term approach been for you? What testimony can you give to that?
Well, it's been hugely successful.
Yeah.
When people are truly in it for the long term, and, I find out a lot that people think that they are in it for the long run, but we do live in a short-term world, and it's hard not to get bogged down or sucked in by what's happening in the short term. But, people often take an approach to investing either looking in the rear view mirror, thinking that they can duplicate history and avoid some of the pitfalls, or they try looking into a crystal ball. They have the internet has no shortage of conspiracy theories about what's going to happen in the future. You know, the financial, type in financial collapse into Google and see what all you come up with.
And these are actual conspiracy theories, not conspiracy theories labeled as such that it come true a couple years later. Actual conspiracy theories, right?
Yeah. So, I mean, there's, you can look at history, but, although history rhymes, it doesn't necessarily repeat itself exactly. So, there's a temptation even, I can remember getting into the business and you were introduced to these things called hypotheticals, where you can go in and you can build portfolios and you can see what the return was. Well, it was very easy. Like if you pick an asset allocation or a certain portfolio, you put together a certain portfolio and you see that the return didn't come out as good as you want, well, then you can go back and you can tweak the percentages. But that just goes to show you that, what you think might be the best thing doesn't always turn out to be that. So you can't really invest looking in the rearview mirror and think, oh, well, if these things happen again, I'm going to get out. If you study the financial financial crisis and you think, oh, well, if these things start to develop again, then I'm just going to get out. Well, things are different almost every time. And you can't really predict what's going to happen just by looking at history. And you can't really, we were not made to know the future. I mean, the Bible has some pretty strong cautions against divination and things like looking into a crystal ball and things like that. So neither approach is really foolproof. So history can serve as a guide, and it's good to have knowledge of the current environment, as what's going on can lend itself to making some assumptions for the future. And we talk about that in our analyst meetings and as we try to formulate the strategies that are going to help people. But, you have to be on guard against your emotions. If you allow fear to dominate, either fear of the past repeating itself or fear of the future about what could potentially happen, if you allow fear to reign, you're going to be paralyzed, and you'll be like the wicked servant who buried his treasure because of fear, because that's the excuse that he gave when he asked, when he was told by the master, when he was reprimanded and called a wicked and lazy servant. And, his excuse was, well, I was afraid. I was afraid because you're a harsh master and you reap where you haven't sown. So that fear caused him to bury his treasure. So if greed is motivating you, you become overconfident in your ability to make money. And a lot of times you make mistakes. If hindsight is 20/20, people look at the successes of the past and they say, oh, well, the market has averaged 9 to 12%. But you know what? I think I can avoid or skip those negative years and those downturns by getting in and out of the market. And most of the time, people end up hurting themselves with it. But we can't know everything that's coming. We weren't meant to. But what we know, what we can hang our hats on, is that God owns it all. He will trust those of us who are faithful, those of us who are obedient, and those of us who are generous. Our God is a God of abundance. And, we really shouldn't act like funnels where we funnel everything into our own we should act as funnels where it passes through, not as reservoirs where we try to capture and hold everything. When we listen to the scripture, we hear of rivers and living water, and those flow, right? Just like a funnel. Yeah. Things flow to us, and we're good stewards, and we deploy those things. Cisterns, on the other hand, get stagnant, and they pollute those who drink from it.
Well said, Shana. I appreciate that so much. I know it was encouraging for a lot of our listeners, too. Kim, a quick question here before the end of this segment, saying, it's my understanding inflation-protected bond funds protect against the risk of inflation, but not from the risk of rising interest rates. Since we've had both recently, my funds have lost substantial value. When do I throw in the towel and chase the better-performing CDs? She's 62. What do you think, Shana?
Well, I don't know that you totally throw in the towel, but there are, and we messaged this, I want to say about a year and a half ago, to shift from the inflation protected to some of the CD ladders. So you could act on that now if you haven't done so. Well, folks, we're coming up on a break. For those of you who listen to the short version of the show, we encourage you to get our phone app where you can hear the whole show and past episodes. For the rest of you, we want you to hang around because we're going to take a short break, but we'll be back with more financial issues right after this.
Do you know what you are supporting when you purchase mutual funds and stocks? Think about it. When you invest in a company, you make a decision to support the things that that company supports. And it may not be things that you agree with. Financial Issues is a ministry teaching people like you how to invest biblically, responsibly, keeping your investments clear of companies that may support an ungodly agenda. Learn more by going to financialissues.org. Financialissues.org.
For $28, you can sponsor an ultrasound scan that will enable an abortion-minded woman to hear the heartbeat of her baby. 90% of the time when this happens, that sound will change a woman's mind and cause her to keep the baby. And guess what? An anonymous donor is matching your gift. For every 200 scans underwritten, an ultrasound machine will be purchased and placed in a life-saving preborn clinic. Go to preborn.com/FISM to give today. That's preborn.com/FISM.
The miracle of carrying a child creates a unique bond between a mother and her unborn baby. She feels the baby's movements and responds to their needs even before birth. Help create that bond between an abortion-minded mother and her unborn child by giving the gift of life through Preborn. During the month of May, you can bless your mom for Mother's Day by giving to Preborn on your mother's behalf. For $28, you can sponsor an ultrasound scan that will enable an abortion-minded woman to hear the heartbeat of her baby. 90% of the time, that sound will change a woman's mind and cause her to keep their baby. Give the gift of life to the woman that gave you life by sponsoring an ultrasound. Go to preborn.com/FISM to give. That's preborn.com/FISM. You can help an abortion-minded mother receive discipleship, encouragement, and the strength needed to have her baby.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Hey, folks, a reminder for you, the conference call is posted from yesterday. Make sure that you take a listen to that today. It was great stuff. Shana gave a lot of good information. If you missed the conference call, it's on the conference call page right now. It's at the top. There's also a note there about the potential date for the next conference call, so make sure that you check that out as well. Good to be here with you all this morning. Quickly here, let's take a look at what the markets did yesterday. The markets end of the day in very positive territory, actually. They had a really good day. They were really pleased with the consumer inflation report yesterday. The Dow finished up about 0.9%. The S&P 500 was over 1%, hit a new record, actually amassed 5,300 points for the first time. And the NASDAQ, up about 1.4%, also hit a new record. 10-year Treasury yields finished the day down to about 4.3%, and oil closed under $79 a barrel there. The pre-markets this morning were muted, and the markets currently are also relatively flat. as the Dow is looking to approach that 40,000 mark. So we have some great content here I wanted to get to, folks, from Dan Celia about taxes. Good reminders here when we're talking about dealing with taxes. This first clip is about not fearing paying taxes. Here's our founder, Dan Celia.
Don't be driven by paying taxes in anything you do. So don't take profits because I don't want to pay the capital gains tax. Don't, do some kind of investing in a product because it's a taxable product and I'm going to be, I'm going to get big dividends and interest and I'm going to have to pay tax on it. If you are pushed in a higher tax bracket at that point, at that range, it may be worth it. I would be surprised if the net income that you keep after all taxes is not going to be higher than it was. So chances are it still would be worthwhile, but we kind of get caught up in maybe a misinterpretation of how we would apply the additional income tax. And that kind of messes our mental calculations up. When I had my trust company, and I was dealing mostly with high net worth people, I never advertised. We never really tried to get business. We had a very good business there towards the end before we sold it to a bank, and people would come usually refer to somebody else. We never took on new clients. We never sought out new clients. We weren't in a position to do that. We didn't want to grow our overhead. So we did take referrals. And I used to always tell people, look, I have two rules before you decide or think you want to come with our firm. And I used to say, I've got two rules. Number one, you need to understand if I'm managing your portfolio, you will pay taxes because I don't do anything for the sake of trying to save you some taxes. So if at all costs you don't want to pay tax, you got the wrong guy. Don't use me because you're going to pay taxes and you're going to be mad at me. If you want to make 30% when the market's 30% up, and that's what you want to do, then you got the wrong guy because I'm probably up 19, not 30. So you had to give all those things. And a lot of people would walk away from that, but a lot of people didn't.
Particularly talks about qualified versus non-qualified accounts. Here's one more clip of our founder, Dan Celia, with Wisdom on Taxes.
I understand that the employer's 401k counts as a qualified plan, but then I was uncertain, like Roth or like your IRA. Does that count as a qualified? Can you give a little detail on
a qualified plan? Is a retirement plan.
Okay.
That's all you have to think about. It's a retirement plan. So if the government is regulating the plan, which they regulate Roth, they regulate traditional, they regulate 403Bs, they regulate IRAs, 401Ks, all those things. If it's regulated, it's a qualified plan. I saw this coming. And by the way, I'm not real smart. It wasn't because that's not why I saw it. It became very obvious in 2009 when Barack Obama, in August of 2009, went to the Department of Labor and said, I need you to run some numbers on what it would cost the government, what it would really make the government if there was, he didn't use this word, obviously, I'm using this word. If we confiscated everybody's qualified plan and issued them an annuity, an income for the rest of their life annuity, and did away with Social Security and used all of that money to get rid of Social Security and get rid of our debt. They wouldn't get rid of it totally. They would get rid of those that had plans, and that would have saved, so, and there were a number of members in Congress that were thinking about this and considering it. I made the mistake back, that's why I remember it so well, to mentioning it on the air, and I got clobbered. And I kept saying, look, I'm just mentioning this kind of stuff that this guy's talking about. But remember, he wants to get reelected, so there's no chance of him doing it. So here we are. Now we're seeing and watching firsthand Congress changing the rules. The government thinks anything they regulate, they own. That's how the mentality is on Congress. That's what they think. You mean to tell me you think they can't change it? So they can't change the tax code? That's different. Okay. They can change this because it falls in the tax code. They regulate it. They can change it. They can do whatever they want with it. And they will if they have to. Sure enough, this year, we got to change. So, and it impacted Roth IRAs. It impacted traditional IRAs. So all I'm trying to say, I do care, but at the same time, I mean, everybody's going to do what they think is right, and they're going to either believe me or they're not going to believe. That's fine. I don't care. It's irrelevant. All I'm saying is that we shouldn't be obsessed, which we are. The American people are obsessed with taxes. And in order to save paying a little taxes, we are putting at risk our entire wealth. Because I'm not going to do that. You mean that when I sell a stock and I make $50,000, I got to pay 15% tax? You just made $50,000. You're complaining over a 15% capital gains tax. Wouldn't it be better to have all that money, or do you want to let Uncle Sam take? I mean, really, the vast majority of people have all of their wealth in qualified money. All of their wealth, over $17 trillion, all of their wealth in qualified money. And they have $600 in their savings account. I mean, it's ridiculous. So my premise has been, please, people, I'm not telling you what to do. I'm just telling you to rethink it. You know, have an IRA, you should have one. Have a Roth IRA, you should have one. But don't keep trying to figure out how you can have more. Oh, and I'm going to get my wife one, and maybe I'll put one in my kids' names, and I'm going to try to max out my one at work. And all, I mean, you know, they're trying to come up with ways to do anything they can to save from building wealth that they have total control over. They don't want to do that. They'd rather have all their wealth in money that Uncle Sam can get their grubby hands on, that they just to avoid a little bit of tax.
Folks, hope that was helpful for you there. Good reminder, good encouragement as always. Here's a headline before we get to the ag report. Interesting one here. Nearly half of Americans say finances are taking a toll on their mental health. That's 47% of U.S. adults said that money has caused them anxiety, stress, sleeplessness, depression, other negative mental health effects. This is according to Bankrate's latest survey. 65% of respondents cited inflation and high prices. 56% said they're worried they won't have enough money saved up for emergency. 47% said they're most worried about paying off their debts. Folks, one step at a time is the way out of this. Remember to trust in the Lord as well. We got the ag report coming up here, and then we'll be back with more financial issues after this.
This is Craig Haugard with your Financial Issues Ag Update for May 16. Corn prices ebbed and flowed yesterday with shifting weather models, which initially gave rise to a major short covering action early in the session and then gave way to a complete reversal that caused funds to sell back what they had covered earlier when the forecast turned to more favorable planting conditions. At the close, May corn was a nickel lower at $4.62 1/2. Soybeans had a disappointing crush report and finished softer for the day. The NOPA crush numbers for April came in at a touch over 166 million bushels. That was a 7-month low, and the average trade estimate was looking for a crush number of 183 million. July beans were a penny lower at the close at $12.13 1/2. The wheat market seems to have stalled out. Now, there are still many unanswered questions about the extent of damage done to Russia's wheat crop during the recent cold weather, but many traders believe that it's already been priced into the market. Here in the U.S., the first leg of the hard red winter wheat crop tour estimated the yield at 49.9 bushels per acre. Now, that was better than the 5-year average of 42.7 bushels per acre over the same territory. At the close, Minneapolis July wheat was 6 1/4 cents lower at $7.27 per bushel. Kansas City dropped by 8 1/4 cents to close at $6.75, and Chicago was 6 3/4 cents lower at $6.65 3/4. Cotton futures experienced a bit of a bounce. At the closing bell, July futures were up 78 points at 75 $105.41. Livestock futures were mixed. August live cattle were 40 cents higher, closing out today at $176.52.5 per hundredweight. August feeder cattle rose by 20 cents to settle at $255.87.5 per hundred. And we had July lean hog futures a nickel lower, ending out the session at $100.87.5 per hundredweight. Class 3 milk futures had a pretty lethargic session. At the close, June futures were down just a single point at $20.85. This has been Craig Haugard with your Financial Issues Egg update. We'll be right back with more financial issues after this.
Throughout the month of May, FISM is partnering with Preborn to fund the light by providing 100 ultrasound machines to pro-life centers around the country. Now, how can you contribute? Well, for as little as $28, you can provide an ultrasound scan to an abortion-minded woman in crisis. And when that woman hears the heartbeat of her baby, she will choose life, get this, 90% of the time. It's remarkable. And guess what? With the help of a donor match, for every 200 scans donated, that's for a net value of $5,600, Preborn Ministries will be gifted an ultrasound machine to place at a clinic in need. Each machine has the potential to impact hundreds of thousands of mothers' choices. Preborn also offers additional support to mothers in need and presents the gospel to every mother who comes into their clinics, knowing that salvation is the greatest gift that can be given to a mother and her child. So go to preborn.com/FISM to give. That's preborn.com/FISM.
Do you want to invest in biblically responsible stocks? Financial Issues can help. For only $132 per year, our team of experts will help you make wise decisions with your money and guide you to successful investments that will not dishonor God. You'll also have access to our portfolio tracker tool, which will help you keep an eye on your asset allocations. And our buys and sells page, which will give you valuable information about biblically responsible stocks. Being a Financial Issues partner is the best way to invest in accordance with biblical values. Make the most of your money by becoming a partner today. Sign up at financialissues.org. That's financialissues.org.
Hey, folks, we're coming back in here. Sorry about that. We had a little technical issue there with the intro music, but it's good to be here with you all. Just wanted to remind you today's show, in part, sponsored by our friends over at Samaritan Ministries. Listen, folks, if you need Christian health sharing that is affordable and biblical, you got to check out Samaritan Ministries, especially if you're maybe on Medicare and you need something that's supplemental. Samaritan Ministries, perfect place to go. SamaritanMinistries.org, or you can call them 1-877-764-2426, 1-877-764-2426. I'm on Samaritan. Our full-time staff members are also on Samaritan as well. So it's a really great thing to be able to do there. So make sure that you do that. Hey, guys in the control room, can you guys mute that mic in there? Sorry, I'm just hearing some background noise. Thanks, fellas. Folks, great news yesterday. Huge day in the Preborn update. Huge day. You guys did a great job. We're now up to over 30 ultrasound machines underwritten. So we are well on our way, almost 2/3 of the way there to our goal of 50. We're just a little more than halfway through the month, so we're right on schedule. But boy, I'd love to blow this goal out of the water. So go to preborn.com/FISM. The best way to do it, if you're familiar with our website, is go to financialissues.org, click the Preborn banner. That'll take you right to that landing page there at preborn.com. Just to keep in mind, every time we hit $5,600, an ultrasound machine will be underwritten. Many times that is what saves the life of a baby, is when a mother can get to an ultrasound machine, hear the heartbeat of her baby, see the ultrasound. 80 to 90% of the time, the mother's going to choose life. And it makes sense. I mean, of course, the mother's going to choose life when she realizes that that is a life inside of her. So Preborn's doing some great work there. Once again, $5,600. Every gift that we hit, $5,600, an ultrasound machine will be underwritten. And just remember as well, every cent that we raise is going to be given back to FISM. So if you love FISM, give to Preborn. Great thing to be doing this month here. I might get to a headline if we have time there later on in the program. But Grant, I know we do have at least one question that we can get to today. Do you want to tackle that one there? I believe it's from Marvin.
Yeah, absolutely.
Sure.
So here's his question. I always hear from you folks about this, an investment for the long term, but I also always hear you mention the end time. Shouldn't we be investing in short term? Make money now only because God only knows the time of when the end times come. Thanks and good job.
Thank you for that question, Marvin. Good one. We'll tackle it piece by piece. We speak about this sometimes on the show, but it's a good reminder. Let me open by quoting my friend and mentor, who's now in glory, Dan Celia, the founder of our ministry. He always used to say something like this: we need to live as if Jesus Christ will return today, but we need to plan as if he won't come back for another 100 years. We need to live as if he's going to come back today. We need to plan as if he's not going to come back for another century or longer. Marvin, the reason why we encourage people to invest in the long term, while understanding that we are in those general end times, as you said, is simply this: none of us knows the day or the hour that the Lord will return. None of us knows. That's part of the hidden will of God. He's chosen not to reveal that to us. If any of us thinks we can predict it, I will go on a limb and say that that person is a fool, because the scripture clearly says no one knows. And I would actually argue that if people claim to know, if they say, oh, I know exactly when Jesus is going to come, that's actually revealing of the sin behind all sin in that person's heart, which is the desire to be God, because only God knows the day or the hour. Now, the Lord Jesus could return this afternoon, or he could return 5,000 years from now. You understand, both of those are possibilities. We simply don't know. God does. Since none of us knows the day or the hour, Marvin, we need to plan financially as if Jesus will not come back in our lifetime. That's being a good steward. That's being wise. We need to take care of our families. We need to take care of our churches in the event that the Lord will not return in our lifetime. Planning for the provision of those who come after you is an excellent thing to do. Now, we might not need it. Say you plan as if Jesus won't come back for a while. You plan to have money for your heirs, for your children, grandchildren, kingdom beneficiaries, all that sort of thing. And let's say Jesus does come back this afternoon or tomorrow or next week. Well, it's not going to matter. Your money's not going to matter at that point. You did a good job stewarding for it, and the plan ended up differently. Oh, well, it's not going to matter. Nonetheless, it's absolutely a provision worth taking. Even if Jesus comes back this afternoon, you should still plan as if he's not going to, because it's being a good steward. It's being wise. From a financial perspective, Marvin, here's the key. We need to live as if our money is going to long outlive us. We need to provide for our heirs. We need to provide for the body of Christ. We need to leave a lasting legacy of faith. That's a wise thing to do. And so we shouldn't be invested in the short term in that way, because there is a chance that Jesus will not come back in our lifetime. Now, I will tell you, from a spiritual perspective, we have to have a very different perspective. From a spiritual sense, we have to have these two simultaneous perspectives going on. Financially, we're planning for the long term. Spiritually, we have to plan as if the Lord will come back today. Spiritually, we've got to be ready for that return. The scripture says he'll come like a thief in the night. No one knows. Could come when we least expect it, don't you see? We need to live spiritually as if every day on this earth is our last day, either because this is the day we will die or this is the day the Lord will return. So that means we got to have a fire in our gut to spread the gospel and to make disciples and to kill indwelling sin and to teach our children and grandchildren to love and serve God and urgently live for the glory of God. And I'll include in that as well to use the money we have right now to spread the gospel. The money that you have right now, not worrying about what you might have in the future, but what you've been given right now, use that money to spread the good news and to fund the light? So Marvin, it's a great question. You got to have those dual perspectives at play. Financially, plan for the long term. Spiritually, plan for the short term. Meaning, financially, you need to save, invest, be ready to give, all that stuff as if the Lord will not return, as if you will live for a long time, as if your family will live for a long time and they will need that money someday. But spiritually, every day we have to treat it as if it's our last day, because it just might be. And there are people around us who are on their way to hell unless they hear the gospel. So there's urgency there. There's fire there. And I'll just remind you once again, Marvin, if this mindset ends up, let's just say, for example, that you follow a good long-term strategy and you invest for the long term and you're putting money away, and somewhere in the middle of that, the Lord Jesus decides, you know what, I'm going to return. And you're thinking, man, I saved all this money. I was going to have a great retirement. I was going to have money saved up for my kids. No. It's not going to matter at that point. You will be with the Lord in glory, with your eternal treasure. The treasure that you saved up in this life will be dust. You're not going to care. It's much better to do that, to plan anyway, and if the Lord returns, to not need that money that you plan to save up. It would be much better to do that than to assume that he's going to return today or tomorrow and therefore not plan for it and not have anything saved and not, provide for the future needs of your children. And then the Lord doesn't return. And now you're stuck with no plan and your children aren't provided for and your grandchildren aren't provided for because you mistakenly assumed when the Lord would return. Does that make sense? I hope it does. So you invest for the long term financially. You live spiritually for the short term, knowing that at that moment, when the Lord returns or when you are called home, when you leave this earth, all that's going to matter is you're standing before God. Nothing else will matter. Your money's not going to be worth a hill of beans, as Dan always used to say. And truthfully, folks, that's what matters all the time, ultimately. Even more than our money, what matters most is our standing before God. And so that's why our strategy, which is financial in essence, is based upon what is spiritual. We have a seen strategy where you have money in your hand, you have money on your brokerage account, but it is governed by a spiritual thing. And that spiritual thing is the gospel, faith in Jesus Christ, the authority and inerrancy of the Word of God. So you can use that money to invest for the glory of God. That's biblically responsible investing. Marvin, I hope that makes sense. It's a good question, my friend. And I appreciate that. I hope that you'll follow up there. Some chat comments. We got some great things here. James is on the chat. We got Daniel, Uncle John. Great to see you all today. I hope you'll join us once again for tomorrow, folks. We'll also be on Bible study tomorrow morning, so I hope you'll join us then. We'll be in 1 Timothy 6, verses 11 through 12, I think. So that's where we will be there. And just a reminder, again, please do consider using the money that you have right now to fund the light with preborn. I mentioned a headline that I would get to. We mentioned yesterday on the program, actually, pro-life activist by the name of Lauren Handy was given a nearly 5-year sentence for alleged FACE Act violations. Fellow activist Herb Gerhardy was sentenced to over 2 years in prison as well. Now, these charges stem from a protest at a D.C. abortion clinic run by a notorious late-term abortionist, also known as a committer of infanticide, a murderer, named Cesar Santangelo, I think is the correct pronunciation there. Now, these protests gained national attention after the driver of a medical waste van outside the abortion clinic gave demonstrators a box containing 115 well-developed aborted babies, 5 of which appeared to be full-term. This is genocidal here, folks. This is, the left has hijacked that term. This is actual genocide. This is infanticide, mass infanticide, what's happening here. This is why preborn is so important. Preborn's funding the light. Preborn is saving babies. That's why we're partnered with them. So consider giving to Preborn today. We're well on our way to hitting that goal. Let's keep it moving here, folks. Boy, a great show as always. I appreciate you all so much, and God willing, we will do it again tomorrow. Remember, everything you have belongs to the Lord. Let's be found good and faithful stewards with it. Whether he returns today or whether he does not return for another several thousand years, we want to be found good and faithful stewards. And whenever that day comes when we meet him, praying that we would hear those words, well done. And I trust that you know and believe in Jesus Christ today for salvation. If you don't, consider visiting our website, resources tab. Do you want to know God? Great place to go for that. God bless you all. We'll see you tomorrow for more financial issues. Have a great day.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.